Hey guys, Kanal here from Level Traders. So far in this series, we've looked at an introduction to technical analysis. We've looked at trends and channels, how to identify them, how to trade a breakout of them. We then went on to look at moving averages, what they are, what the most popular moving averages are used by traders, and how to trade a breakout of a moving average. In today's video, we're going to cover, in my opinion, the most important aspect of technical analysis. That is support and resistance. Support and resistance is something that I use every day in trading. We'll look to cover what exactly support and resistance is, how to identify support and resistance, and we'll look at pivot points, something that scalpers and day traders use to identify turning points. As always, I hope you find this video useful. Thanks again for watching. Check this one out. So support and resistance. Firstly, what are they? So support is where buyers exist, so price is likely to rebound. Resistance is where selling pressure exists. This is usually where price stops and we see a bit of a dip in the price. Now, support and resistance, they're usually marked as areas or zones rather than exact numbers. Even though I have marked exact numbers here, you will normally see price trade around that area or zone. So for example, if you take the low in mid-March, for example, in 2020, you can see that around 2180, that price acted as support because price bounced off and rallied higher. Now the same could be said for 2800, which bounced multiple times in that area in March, then early May and late July to September before breaking higher. In terms of resistance, the S&P 500 broke below the 3400 area late July 2020, and then price went back up to retest that in early September. So what I'm showing you here is how you can use support and resistance to identify turning points where price is likely to react or move either upwards or downwards depending on whether it's support or resistance. Now, what I showed you on the previous page was support and resistance being horizontal lines. Now, it doesn't always have to be horizontal. It doesn't have to be that way. So, you can also find support and resistance in a channel or trend line. That's what I've got in front of us here. So, I've got the Apple chart here. And what I've done is I've taken the daily chart between July 2020 and February 2021. Now, first thoughts here is this is an uptrend, right? Because it has consecutive higher highs and higher lows. Now, if I apply the methodology of joining the lows and the highs together, I get a rising channel, which is highlighted by the blue circles. So trends and channels is something I covered in the previous video. If you want to know more about trends and channels, why not check that out? So in terms of this chart, the points I've drawn together on the trend line act as support and resistance areas. So the areas that I've kind of highlighted in blue, they're potential areas where they act as support and resistance. So it gives you ideas of where price is likely to react. You can either go long or go short depending on whether prices hit the lower bound or the upper bound, i.e. resistance or support. So now we've covered two types of support and resistance, horizontally and using trend lines. Let's take this a step further and look at how we identify support and resistance. So here I've got JP Morgan. I've got the monthly chart, and one thing to start off with, when it comes to identifying support and resistance, it's more of an art than exact science. If I asked 100 different traders where support and resistance is on this chart, I'm likely to get a range of levels and areas. Now, there will be a lot of common answers, common areas, but you'll see a variation in levels where traders will pick out on this chart. This is why I say it's more of an art than an exact science. Now let me give you my take on this chart. So based on what I see in front of us, I've highlighted three areas of support and resistance. 53.60, 94, and 141.20 cents. Now I should point out these are not the only levels on this chart. These are just some of the levels that I've picked out. So let me talk you through my logic and why I've picked these levels out. So if we take 53.60, you can see price has been hovering over this period for a good part of at least 2 years. What then happened was price broke out of that area at the end of 2013, and it's been retesting this area between 2014 and 2016. There's been multiple attempts to retest or even break back down below this level, and I've highlighted some of the examples here. For example, in mid-2015 and at the start of 2016, both times price held and bounced back. That shows that this area is significant, and because it's held, it's acted as strong support, which price has then bounced back and rallied from. If we then look at $94, price broke above that area late 2017 before having a major retest of that area at the start of 2019, which I've circled. However, if you look at the price, it attempted to break that 94 area on multiple occasions before prevailing. You've then got a clustering of price action nearly all the way through 2020. Price even closed below 94 at the height of the pandemic before rebounding emphatically. Then there's the 141.20 area. At the end of 2019, price fell sharply at this price of 141.20. Bear in mind the pandemic really didn't set in until March 2020, so this area has to be treated as an important level. To confirm that, you had a price attempt to break at the start of this year only for it to fail and roll over. However, it does look like price has finally broken up above this level. Most likely a retest will be on the cards if it does break. So this is my thought process of how I determine these levels of support and resistance. As I've said before, identifying these levels and area is more of an art than an exact science. So, pivot points. Let's talk about that now. So how do traders identify potential turning points in financial markets? So we've looked at support and resistance areas. We've looked at both horizontally and trend lines. But trying to do this intraday, how would a trader do that? So up until 2010, pit traders would signal buy and sell orders through shouting and hand signaling. You know, you've seen trading places where they go nuts and everyone's shouting and screaming. That was a signal to identify turning points, and that was known as the open outcry system. But that's since been replaced by electronic trading. So how do you replace that? How do you replicate that? Pivot points are one way of identifying these turning points. They're used to identify market movements based on high, low, and closing prices of the previous day. So I've got an example here. I'm using Microsoft. This is a 1 hour chart. So one thing to know, I find that pivot points work much better on a shorter time frame. So I'm using the 1 hour chart here on Microsoft. And what you can see is I've got you can see a bunch of lines on the chart in red and green. Now the red represents resistance areas, pivot points, and the green is support pivot points. And you can see it's got S1, S2, S3, and R1, R2, R3. That just represents the different levels. So support 1, support 2, resistance 1, and resistance 2. And what you can see in the 1 hour chart is S1 acted as strong support intraday on this chart. You can see S2 was close to being triggered, but S1, you can see a lot of price action. Price was reacting a lot around the S1 area. So you can see how pivot points can be used for intraday trading or scalping. So these pivot points, you can manually calculate them using a formula. Let's have a look at an example. So this is theoretical. I've just made these numbers up. So the first thing, everything hinges around the pivot point. So that's the first thing that needs to be calculated. So what I've done is I've just taken some random numbers. So first thing you need is the previous day's high, low, and close. So I've got the high is 20, the lowest 12, the closing price is 16. So the pivot point formula is you take the high, the low, and the close and divide them by 3. So the pivot point is 16. Everything hinges around that. From there you can work out your resistance 1, your support 1, your resistance 2, 3, and so on. Now the first resistance area is simply your pivot point times 2 minus the low, so that's 20. And then the first support area is your pivot point times 2 minus your high, and that comes out as 12. And I can apply the same kind of logic for following these formulas to give me the second resistance, third resistance, second support, and third support. And these are the values you see, and essentially that's how they're calculated. And what you saw on the previous page on the Microsoft chart, that's exactly how the system has calculated that. So that was a way of going through this numerically so you can see exactly what the formula and the mechanics are behind calculating these pivot points. Hopefully this has been a useful session in going through support and resistance and pivot points. Remember to subscribe so you don't miss any future videos. Thanks again for watching and your continued support. Take care, guys.